Hey everyone, welcome back to Corporate Declutter, the place where we dig into those confusing corporate filings. Today we're diving into a report from Wesco International, and trust me, it's more exciting than it sounds. It involves some financial maneuvering that's a bit like a company deciding to declutter its financial house, so let's get into it. Basically, this report is letting everyone know about a financial move Wesco is making. They are planning to pay off some of their debt, specifically a type of stock called Series A preferred stock. Think of it like paying off a loan, but instead of a bank, it's to the people who own these special stocks. Okay, so Wesco is getting rid of these depository shares, which are linked to the Series A preferred stock. The ticker symbol to look for is WCCPRA. It's like saying they are retiring a specific type of financial instrument they issued some time ago. They are planning to do this on June 22, 2025, which they call the redemption date. This is just a fancy way of saying the day they pay everyone off. Here's the important part. Wesco is going to pay $25,597.66t for each share of Series A preferred stock. If you had one of the depository shares, you would get $25.59,765.60.25. This includes the original value plus some extra dividends, which is like interest on the loan. If you own these shares, you'll need to send in your receipts to Computershare Inc. at the address in the report to get your money. But if your shares are held electronically, you don't have to do anything. You'll get a check automatically. It is important you follow all the instructions in the 8K report to avoid any issues. After June 22, 2025, these shares won't earn any more dividends. So it's like the loan is officially paid off and done. Anyone who holds these shares after that date will only be entitled to that final payout. Wesco is also expecting to make around $30 million because of this move. They will show this as a gain in their financial results for the second quarter of 2025. This is because getting rid of this debt simplifies their finances and makes them look more profitable on paper. It's like cleaning up a balance sheet and finding some extra cash in the process. Now let's put this move into context. Wesco is a pretty big player in the world of electrical, industrial and communications products. They basically help businesses and governments get all the stuff they need to build and maintain their operations. This includes everything from cables and wires to lighting and security systems. By getting rid of this Series A preferred stock, Wesco is likely trying to lower its overall costs and make its financial structure simpler. Preferred stock can be a bit expensive because of the dividends they have to pay out regularly. Paying it off can free up some cash and reduce financial risk. So what's the big picture here? Wesco is streamlining its finances, which is usually a good sign for investors. It shows they are actively managing their money and trying to improve their profitability. Now, for my opinion, Wesco seems to be heading in a solid direction. Reducing debt and simplifying their financial structure are smart moves that can make them more attractive to investors. There are some risks though, like any big economic changes that could affect their customers' spending. Also, they need to keep up with new technologies and trends in their industry to stay competitive. Overall, Wesco appears to be making sensible choices to strengthen its financial position and focus on future growth. Thanks for watching Corporate Declutter. If you found this breakdown helpful, please hit that like button, leave a comment and subscribe for more insights into the world of corporate finance.